The S&P 500 had another update today, closing at 5675.29, up 1.08%. This 5700 level has been quite the important level over the past few weeks. Today's closing candle came near to the 5700 level before rejecting. We also saw this a few trading sessions ago, as well as the last leg of the sell-off back in the earlier part of March. But big volume in the options market traded at this 5700 strike, over 300,000 contracts. So clearly a key level with the largest gamma exposure concentration at the 5675 strike. Technically speaking, we see a cup and handle pattern forming. This oftentimes suggests a bullish move is on its way if we see a breakout above this level, all of that corresponding with that 5700 strike. So we're watching this area very closely, in particular in our community Discord. So if you haven't checked that out yet, I'll put a link in the description below. You can see all the setups that we're discussing, as well as follow along in our portfolio with the moves that we're making every day. In terms of the historical gamma exposure, the S&P is still in negative GEX territory. Negative gamma exposure basically means that volatility has increased in both directions, to the upside and the downside. However, the trend is typically to the downside when you're in negative gamma exposure territory. And so we've been watching this unfold over the last month. Basically, since the February monthly options expiration, we have been down here in negative GEX territory. And so things have been trending a little bit higher over the last week. If we do break out above that 5700 strike, I think that'll put us squarely back in positive gamma exposure territory, which is a buy the dip environment.
Yeah, thanks, Anthony. After such a fairly long and drawn out decline we've seen over the last month, it wouldn't surprise me to see this consolidation take some amount of time before really choosing a direction. And especially being OPEX week, I'm really not surprised to see this back and forth choppy up and down that we've seen the last couple of days. IWM did catch my attention. It's still in deeply negative gamma territory, but we did see an improvement off of the extreme lows on the GEX intensity gauge. You can see that here. We were as low as 1.9 billion. Now we're basically improved off of that by about 400 million. And we don't see new negative GEX clusters forming below what we already saw a few days ago. And 200 is currently the largest negative GEX cluster. And so this is kind of interesting because we're at such an extreme that at some point, good news or a catalyst, whatever that may be, could ignite a short squeeze rally. If we go and we look at the chart itself, we did see volume today at 215 and at 220, very high volume at those strikes. IWM is getting close to this 210 area, which is basically where the middle Keltner channel is now. So we'll see what happens. I mean, the whole moving average hasn't really caught up with the move in price yet. So we'll see how it unfolds. And IWM at the moment is looking constructive toward, further upside over the next, week or two.
Thanks, Sean. Yeah, IWM lagging a little bit behind the other major indices. And actually, let's take a look at the Qs now. Today, closing at 480.89. This 480 strike has been a very important level. We've highlighted this in a number of our videos last week. And even after a couple of attempts, we still really have not broken out. The downside was so much more dramatic on the Qs than on the S&P. And so that's why when we look at the chart, it still looks a little bit more bearish than it does on the SPY and the S&P 500. Same thing with the gamma exposure data. Basically everything is below the 480 strike. We have a little bit of gamma exposure growing at 490 and 500, but relatively small when compared to all of the strikes below 480. So everything has basically been consolidating in this zone over the last couple of weeks, and we really have not seen any kind of substantial momentum shift to the upside in the Qs. So that's something we're watching very closely. We need to see a sustained move above this 480 level. If we scroll down and take a look at our 3D gamma exposure surface model, we've got got the largest GEX here rolling off today. This is 0 DTE GEX, so rolling off today at the 480 strike, no surprise there. And if we look out, the next largest gamma exposure concentration is at this 490 strike, and that is in the March 21st expiration. So that's coming up here in a couple of days. This is suggesting the possibility for a move up to the 490 level, and that is actually being balanced out by this negative gamma exposure at the 480 strike. So I think there's a potential for a move or a close at the March OPEX between 480 and 490. So I would target right in the middle of that, right around the 485 strike. That's 1% move up in the next couple of days. That could be what the market is telling us in the options market. So that's something we're going to be watching for to see if we can get any kind of move above that 480 level, maybe a close around that 485 strike by this Friday.
Thanks, Anthony. Very briefly on the VIX, we usually see the monthly VIX options expiring on a Wednesday. Sometimes it's the Wednesday of OPEX week. Sometimes it's the week after. Well, this week with FOMC today, VIX options actually expired yesterday. It fit right within what we saw with the gamma exposure picture. We thought we would be between 20 and 22. Looking at it today, now that we have those options out of the way, we see some high volume at 42.5, which does have my attention. But otherwise, ever since we dropped below the hole, basically 6 sessions ago, the VIX has been, at a downturn. And I am a little cautious because we just touched below 20, but I wouldn't become bullish on volatility unless we saw the whole breached again at 2370, with that area holding at the close of the trading session. So we could see some back and forth, but overall, to me, it looks constructive for stocks.
Thanks, Sean. One asset class that has continued to perform well in both the market upturn at the beginning of the year and the downturn over the last few weeks is metals, in particular gold. We're looking at GLD closing at 281.11, up 0.41% today. And if you recall from our last couple of videos, we mentioned that we were exiting our GLD position. We actually had the 270, 280 call debit spread in one of our portfolios. And zooming into the chart here, you can see when we exited, the gamma exposure concentration was all focused at that 275 strike. So we caught the majority of this move here from the 262 level. We actually entered a little early, right around 267, but after a brief dip, we saw the big surge, and now we're even higher. And if you want access to our gamma exposure dashboard and our option flow analytics tools, as well as our newly added algorithmic trading strategies, which you can research and get full backtest results on and incorporate directly into our gamma exposure charts, head on over to geeksoffinance.com. You can sign up and become a member. We are running a special $300 off our yearly portfolio manager tier subscription. Use code SPRING2025 at checkout. We have a few spots remaining, so definitely take advantage of that while you can. Members also get access to our community Discord. You can follow along with all the moves we're making in our portfolio, as well as trade ideas throughout the day. Be sure to check out the link in the description below. Thanks so much, everybody, for watching, and we'll see you guys in the next video.